Let's now go to Max Keiser of the Keiser Report. He has a program on Russia Today, BBC, Press TV, radio in London. I mean, this guy is everywhere, needs no introduction, here with us, and he'll be with us a little bit into the next hour. Max Keiser, great to have you here with us.
Alex Jones, good to be back.
Well, you just heard that rant. What's your take on it?
Well, to follow up on what we talked about back on the 1,000-point crash on May 6th, on your show we talked about it in terms of being a domestic financial terrorist attack. Now, since that time, just on June 17th, I'm reading a report here, there was another of these attacks. The Washington Post stock doubled in 5 minutes. And this was yet another one of these attacks by program traders and high-frequency traders on Wall Street that are using their technology to manipulate markets. And so now, as I predicted, you would see more of these attacks, and going forward, you will see many, many more of these types of events where prices are skyrocketing or plummeting in 2 or 3 minutes as the people who run the computer programs are booking enormous profits and holding the entire system hostage.
We'll continue, Max.
Well, so that trend is firmly in place. You definitely have now the wherewithal, the ability to put in these enormous market-moving program trades that nobody is doing anything to really stop, and they put lots of money into the pockets of the same people who are financing all the elections and putting in the folks in Washington that we are further deregulating these markets. Now, to move over to the BP situation, this is remarkably the Wall Street Journal. I think this is important to get into the thinking here. The Wall Street Journal on June 15th, their take on it, check this out. They said the oil spill may end up lifting the GDP slightly. You see, Alex, it's not a catastrophe. It's actually it's an economic benefit for the people of the region and for the country.
It's command destruction, just like we're in depression, but the top 6 bank stocks are up, so they tell us the economy's good.
Right. According to J.P. Morgan Chase, the continuing oil spill in the Gulf of Mexico should end up adding growth to the U.S. economy as the huge cleanup efforts are going to outweigh the negative factors like the 1 million permanent job loss, the eco-terrorist catastrophe, loss of that entire region, and the dead zone that will result as a result of this. So this is the type of thinking that we're battling. It's perpetrated by the Wall Street Journal. This idea that everything adds to GDP growth, like an ecological disaster, like a war in Iran, a war in Iraq, all the $1 trillion defense budget, it all ends up adding to the GDP, and we should be celebrating it. The fact that it's ruining the economy and causing massive unemployment and massive social unrest, that's not a problem. As a matter of fact, the social unrest is going to equal more GDP growth as well, because after all, a lot of people are going to be out there, buying placards, protesting the government, and probably buying little, drums to beat in little drum circles as they.
But Max, what about my idea to have people lobby for grand jury investigations at the state level? Because we know the feds are bought and paid for by BP and Goldman Sachs, that of course owns a lot of BP and formerly chaired it just a few months ago. The head of Goldman Sachs also co-chaired BP, as you know. Some of the public may not be aware of that, so I throw that in. I mean, what about criminal negligence? Because we know now, according to the Coast Guard hearings with the survivors and the head engineers, that BP ordered them to do things that had never been done before, and that they said this is going to blow up, and BP said, we don't care, do it. And this went on for 2 months. They kept saying it's going to blow up, it's going to blow up. Don't we need a criminal investigation to find out exactly what happened here?
Well, I don't have any faith in the political process whatsoever. And on the economics, here's where the math gets really dodgy. In other words, the government says that we're going to fine BP $20 billion. Now, what BP did the next day is they announced that Goldman Sachs is going to raise $20 billion new dollars for them. They're going to sell $20 to $50 billion in new bonds, thanks to Goldman Sachs and Wall Street bankers. So they're going to totally pay for this by borrowing money, which when the bets go bad, when they try to hedge those new offerings, of course, that'll end up being another bailout. So the U.S. public is going to end up bailing out them two.
Yeah, they're going to make money on the way up, investing it in a new derivative, and then when it bankrupts, the feds will come in and pay $50 billion, $100 billion, who knows what it'll be by then, into this new Madoff-type scheme.
Right, so you get $20 billion of new bonds that'll just go channeled into the damage fund. But, of course, to pay the interest on that, BP will actually lower their operating standards, and the risk of another event just like this actually went up because there's no punitive damage. All they're doing is they're trying to make it into a slap on the wrist, which they won't even pay. They'll get someone else to pay for it on Wall Street. But to pay the interest, they're going to lower their operating standards and increase the risk of another event like this happening.
All right, Max Keiser, stay there. We're going to come back and get into internet censorship and phone calls. Stay with us. Max Keiser is now joining the GCN Radio Network with a multi-hour program Saturday mornings at 9 a.m. It's The Truth About Markets USA, Saturday, 9 a.m. Central. All right, Max, this is a short segment, but just give me your bottom line. In your gut, you've got Goldman Sachs dumping 44% of its stock the week before. And, of course, we know that they were, at the time, their chairman was also the chairman of BP. And then they made this shuffle right before. They dumped 44% of their BP stock when other oil stocks were way up. We also have the CEO dumping over a third of his stock the week before. We have Halliburton buying this cleanup company that is focused on the Gulf of Mexico in the weeks before. You have the fact that Obama now has called for the carbon tax. This is a nice political diversion. We know that BP ordered them to do things that they never done before that they knew would blow up. You never let a good crisis go to waste. Every way I look at this is an inside job, Max Keiser, to get the new global carbon tax to prop up the new SDR system.
Well, on the trading of BP stock, as you know, I've worked on Wall Street for many years. I know many, if not all, of the tricks that brokers and bankers can play. It's not difficult to predate or post-date a trade. So in other words, they say that they sold their stock before the event. It's not difficult to actually sell the stock after the event and then to monkey around with the reporting and with the compliance and to basically commit a bit of accounting fraud. So that was my first thought, that the dates that they give for their sales were probably cooked, because they figured that they can do it. There's nobody pushing back on the regulatory front, and fraud is the core business model of Wall Street. But let's move beyond that. Let's say that they had pre-knowledge and they were dumping their shares ahead of this. A lot of the intelligence that flows into the trading desks and the hedge funds on Wall Street comes from sources that are not publicly available. That's why the system is horribly out of whack.
Well, yeah, the entire NSA CIA is admitted not just spying on us, but getting intel and economic information to feed to the insiders. And first it was 2 weeks, then a month. Now, 2 months out, they knew this thing was already leaking, having problems, and was probably going to blow. And so, I mean, there you have it right there.
Well, the computers run on algorithms. The algorithms in the computer programs actually are able to read the news. You know, computers read the news now, and they interpret intelligence, and they can interpret data, and they put the trades in automatically. So it bypasses a human element. The computers just trade. And the computers put on a massive amount of trades. And what happens is that you go post facto, and you pick the trades you want, and you dump the trades you don't want into a slush fund, and then you get the government to bail out the slush fund. So this is an advanced version of what we used to call a look-back trade on Wall Street.
So it's an orgy of profit. They make money when they lose money. They make money when they make money. And they just put it all on us and hire more SWAT teams because they know it's going to blow sky high.
They put on a massive amount of trades, and they pick the ones they want, and they dump the ones they don't want into a slush fund or an off-balance sheet account until it blows up, and then they get Geithner and Bernanke to bail out that fund. And they say, well, we never knew that it was going to blow up just because we put in all this toxic dumping.
I've also read that a lot of stockbrokers have been caught dumping it on their clients. Like, they trade with their clients' money, not just the big companies, and then when there's a problem, they dump the losses on their clients and then keep the money for themselves.
Well, the losses are handy for corporations who need tax losses to offset gains. So this is why less than 50% of the Fortune 500 actually pay taxes, because at the end of the year, brokers sell them losing trades to offset their gains for the year. And that's a big business on Wall Street. I've done it myself. You go to the company and you say, I've got a $2 million loss on a trade. Do you want it? I can put it in your corporate account. And they'll say, yeah, we'll take it. You just save them a whole bunch of tax money. So or you have a winning trade, and you call up your client, and you say, I got a winning trade, and by the way, this is going to cost you per the usual means, and you get a kickback.
Everything is kickbacks. Everything is corruption.
Well,
boy.
And that's the problem with you have so many trades, and there's so little accounting of the trades. So you've got hundreds of thousands of trades going on all the time, and nobody's actually, at the end of the day, examining these trades, who's making them, where they're going, and who's accountable for them. So you have all the industries regulating itself.